Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Hello everybody, welcome to the Forex daily video research from the ForexPeaceArmy.com. Today the 18th of January, and today we'll speak about the Swiss franc. Well, yesterday I have made the analysis of the Swiss franc and has found some interesting moments on this currency. I think that it's worth it to be discussed in our daily video research. So we'll start from the monthly picture, because this maybe some of you remember this pattern that we have discussed a month ago, I think, if my mind doesn't trick me. So this nice butterfly pattern on the monthly chart of Swiss franc. Trend is bearish, clearly bearish. But now you can see that market has accomplished 100% expansion from this ABC top pattern. This is currently ABCD move buy, okay, ABCD buy. But you also can see that the speed of the CD leg is much faster than AB, and very often it can lead to continuation of move to the downside. At the same time, due to accomplishment of this target, market can show some meaningful retracement, on the monthly and weekly time frame, and you can understand that this even shell retracement on the weekly chart is not small move. Well, so this is only single important information from the monthly chart, that market has hit 100% expansion. Now let's shift to the weekly time frame that contains a lot of important information. First of all, you can see clearly this ABCD pattern. Now take a look that market has shown rejection of price pattern, also known as railroad track. Also it coincides with the wash and rinse of the previous lows. Why this is the railroad track? First of all, you can see that to the left side from this pattern we have no price action at this area. So market is absolutely clear for a long time to the left. So market was trying to estimate the new level and totally rejected by the fast returns back. This is also bullish engulfing pattern, by the way. Okay, this is first why this is railroad track. If this pattern forms, for example, here, this will not be the railroad track, because to the left side just some weeks ago there was a price action. So this is not a normal price for the current currency, but this level we can say that it's abnormal because we didn't see it for at least for the couple of years. So this is very long-term period where we do not see this time frame. So this is railroad track. Also this is wash and rinse, because by this price action market has cleared these lows and these lows. Also what we have here also, first of all, bullish divergence in the area of accomplishment 100% target. This is not just the bullish divergence, this is divergence at the area of the logical profit objective, on the long-term logical profit objective. This is 100% expansion. Okay, I tell you more. This is also, by the way, the MACD predictive failure pattern or stop grabber. That market shift trend to the bearish, you can see right here. Market shallow trade should bearish, but during this move up, market has cancelled the shifting, and those people who enter on the short side of the market taking this signal now are trapped in the wrong position. So they are in the wrong way, and very often when this pattern forms, it leads to taking out of the previous highs. So I think that this target, minimum target of this possible moves around 10070 right here. So market can take out these highs. This is where MACD predictive failure pattern leads us. Also, as you know, the target of the railroad track is the length of the bars itself, and it somewhere also around this area. So I think that this is the minimum target of the possible move to the upside if it will not be cancelled by the market. So if market will show very deep retracement, or furthermore even take out the previous lows, this context will be cancelled. So this is one thing. If we are bullish, this is one thing that we do not want to see on the market. Now let's turn to the daily time frame. This is daily time frame. Particularly we are interested in this swing to the upside. Okay, daily trend also is bullish right now. So what we can see here, first of all, market trying to push above the weekly pivot point right here, but failed, and now moves to the downside. But this is not the big deal because we have the directional pattern currently. So the rejection of price pattern or railroad track assumes that we do not want to see the deep retracement to the downside, because this rejection of price, the returning of the market to the extremes of this pattern, will suggest that possibly market will accept this area, this abnormal price, previously abnormal price, will accept it, and possibly it can continue move to the downside. When usually when market forms RRT pattern, it shows 382 resistance, retracement to 382 support, or maybe 50%, but 618 retracement will be extreme for this pattern. From the point of view of the bullish engulfing pattern, well, this pattern will be in place and valid until market will not take out these lows. Okay, so I don't know what kind of pattern your particular trade, but if we will see some not deep retracement, I think that if market 50% support or 618 will hold the market, this will be excellent situation and for the development of this pattern to the upside. Well, currently we can see that this ABCD pattern, okay, that with the target of 100% expansion very close to the previous high. So this is at least right now coincides with the MACD predictive failure pattern on the weekly time frame. Now on the 4-hour chart, currently we see the development of head and shoulders pattern to the downside. So the target of head and shoulders, I just for information will show you the classical target is the length between head and the neckline that should be count to the downside. Okay, it's right here, and also you can prove yourself that this is coincides with 1618 expansion that I have told million of times from the head ABCD pattern, from the head to the right shoulder. It's very close to each other. Okay, that's why I very often use the 1618 from the left shoulder, from the right shoulder, instead of the distance between the head and the neckline. Okay, well, what we can see here, first of all, 100% expansion. It's right here, just above the 618 target. 127 expansion is just below it. So possibly market could not reach the 1618 and could be stopped when it will reach 100% or 127. So it's impossible to say right now because this development is only in the progress. But I just tell you what we should watch for. Watch for these areas of support for the potential buy signals in this area. This signal could be investigated on the lower time frame, such as 15-minute chart, 30-minute chart, maybe even on hourly time frame. Maybe it will be double repo buy, head and shoulders, reverse head and shoulders, 3 drive buy, or something. Okay, we do not know exactly what it could be. Also take a look at this pattern. This could be reverse head and shoulders, more greater. Okay, so possibly market for the symmetry can reach as far as 618 support because of this previous lows right here. Well, anyway, we have the solid bullish context on the weekly time frame that will promises us not small move, and the risk reward ratio could be really amazing, because if you'll take a look at the weekly time frame, it's 18870 area. And here you can place stop very close, because if you enter on 618 you can place stops just, for example, just below these lows or below 88 Fibonacci support area. Okay, this will be enough. So that's my point of view on the Swiss franc. I think that market has the interest bullish context on the weekly time frame that promises the nice possible move to the upside. All that we should do right now is watch for buy signals on the levels of support from the recent swing. At the same time, we do not want to see the deep penetration of this swing to the upside. I think that it will be normal if market will stop at least at 618. If it will stop at 50% retracement, well, it will be much better. Okay, so that's my point of view on the Swiss franc. Good luck with this possible trade.